Today, or tonight, actually, I'm going to talk about the impact or the effect of the Fed rising the interest rate on the stock market and AMC, and the the possibility to trigger the AMC Short Squeeze. I'm going to read a few articles and give my comment on what's going on with the inflation and a few events regarding the interest rate. So let's start right away, and I will read in this first article. So I'll give you one moment. Okay, so I'm going to read this article. This one. How do the stock market perform when interest rate rise? On Ford. So I'll read your uh, first paragraph. Congress has tasked the Federal Reserve with the job of keeping U.S. economy running as smoothly as possible. If the Fed believes the economy is lagging, it can cut the federal fund rate to make borrow money cheaper for individuals in business. This move typically push up stock price, rewarding investor better return. The first month of COVID-19 crisis provided the most recent example of this dynamic. In early 2020, the outbreak of the pandemic drove a shocking massive and rapid decline in economic activity. I think by the fastest stock market drop in history, the Fed responded by slashing rate as low as they go, and the economy and stock came storming back. But what happened when the stock Fed raised interest rate? Okay, so now the second paragraph, the impact of the Fed interest rate hike. When inflation too hot or asset bubble get out of hand, the Fed raised the interest rate to cool things off. Higher rates ripple through the entire economy. Mortgage, car loan, business loan become more expensive, slowing down cash flow. This can lead business to amend or pause plan for growth. And the stock market higher rate can incentivize investors to sell asset and take profit, especially in time like now when there have been a few years of double-digit percentage return on stock. As you may guess, investor decision like this can lower stock price immediately, at least if not across major sector. Okay, so now if we go there, third paragraph. Does stock market fell when the interest rate rise? Here's the thing about the US stock market interest rate high. If you try to find data showing a correlation between rising rate and falling market, you may be disappointed. The Dow Jones market recently announced five most recent rate high cycle to see what history says about the stock market returned this period. The analysts duplicate chart below illustrate that during this five long-term period, the three leading stock market index only declined during one rate hike cycle. So now we can see the chart, the rate hike cycle. You can see different period in the last 25 year. Now, we read this part. The short-term impact of higher rate on stock. And this picture different in the short term. Do investors may go straight for exit when the Fed make its announcement, but then things improve over time? Well, I've seen dramatic spend list. I know Fed meeting result of a restricted phone line market started. I love the performance of SP took over the nine Fed rate high between December 2015 and December 2018 tell the ambiguous story. Okay, so let's go to second article quickly. Um, Okay, I'm going to read your summary or the key takeaway. Open Market Committee (FOMC) changed the interest rate. It impacts both the economy and the stock market because borrowing become either more or less expensive for individual and business. Any impact on the stock market to a change in the interest rate change generally experienced immediately, while for the rest of the economy it may take about a year to see any widespread impact. Higher interest rates tend to negatively affect earning and stock price with the exception of financial sector. Higher interest rate also mean future discount values are lower and the discount rate used for the future cash flow is higher. To shield from risk, investors may consider opting for short-term bond and life alternative asset. So that's the key takeaway. Okay, so you can see the fluctuation over time. Okay, so that's repetition. So now, of course, when the rise interest rate, the cost of borrowing uh, increase, and that's the economic activity, and people have tendency to keep their money, to save their money, and then furthermore, we also have inflation. So those two things will stop the economic activity, and now we see some company stop the hiring process or just lay off people. And let me go to the next article quickly. Okay, so that's an article for Blong Bloomberg. Okay, so Robinhood cut 23% of the staff, joining Netflix, Amazon, and tech slowdown after a year of bulking up. The industry is bracing for a recession. So we're already in recession. I don't know why to try to redefine recession and to making excuse. Okay, now with recession fear, mounting inflation, and the war in Ukraine and the lingering pandemic taking toll, many tech companies are rethinking staffing need that include freezing hiring, and recently offer and even layoff worker. Robinhood Market was one of the latest to make cut, moving to limit nearly a quarter of its workforce. Oracle Corp also has been parent its stats this week. We are looking at a dozen companies tapping the brake. Alphabet Inc., Google parent company, is decelerating its recurring report. Chief Executive Office Sundar Pichai told employees this month that although the business added 10,000 Googlers in the second quarter, will be slowing the pace of hiring for the year and prioritizing engineering and technical talent. Like our company, we're not immune to economic headwind, he said. The hiring pause is part of the slowdown, we will say. To enable the role in hiring plan for the rest of the year, it was the annually 164,000 employees at the end of March. Amazon .com Inc. said an airport that was overstaffed after ramping up during the pandemic and the need to cut back. As the variant subsided the second half of the quarter, employees returned from the leave. We kept quickly changing from being understaffed to being overstaffed, leading to lower productivity, Chief Financial Officer. Brian also said at the time Amazon has been subtly seeing some warehouse space and post development facility mean for office workers, saying it needs more time to figure out how much space employees will require for hybrid work. During its quarterly earnings call on July 28, the e-commerce giant said it'd been adding jobs at the source rate since 2019. After relying on attrition to win its staff, Amazon now has about 100,000 fewer employees than previous quarter. The company now had 1.52 million full and part-time workers. It's still the largest employer in the tech world, despite the reduction in head count. Okay, so is there a few more example like Apple, Carvana, Coinbase, Global, Compass, Jimmy Trust, GoPuff? So is there a few example? I'm not going to read everything, but you get the idea. So now um, I'll quickly uh, expose the impact on the hedge fund. And we know Citadel is one of the hedge fund amongst many, and we know they borrow for AMC and GameStop and so on. So let's look the final article. Uh, let's see. Okay, now this article. One, one second. One second. I don't know what's going on. Technical issue. Uh, technical issue. Let me fix that problem. But one thing regarding the interest rate, uh, we have stagflation. So basically, the inflation will remain high, even though they raise the interest rate a few times, and that inflation will remain high for some time. So um, bear with me, trying to fix the problem. Okay, so um, didn't find a proper article, but doesn't matter. What I can see regarding for the hedge fund, when the interest rate is rising for the hedge fund, the people that invest in bond, it's a good thing. They have some protection. But if they invest with a short stock, that's quite the opposite. Uh, be more expensive for them to reimburse the margin call. And second thing, it's more difficult for them to funding or to borrow money to cover their bet, and it's more difficult for them to find liquidity and to borrow, and because it's more difficult to qualify to find a loan, and it's more expensive. So that's three reasons that will affect hedge fund if they bet against they try to short AMC and GameStop. And also we can see right now also a lot of the hedge fund have some investment in real estate, and right now the real estate will be affected because uh, a lot of people that have mortgage won't be able to renew their mortgage or will need to sell. And at the same time, a lot of people won't be able to qualify to receive a loan from the bank. So we can't expect real estate stock market crash, and and that's one amongst many problem we have right now, and we still have inflation, and we have a many geopolitical issues regarding China, United States, and Russia, United States, and so on and so on. And we have a energy crisis, and also we had an executive order 2 months ago that prevent company to use as collateral Chinese corporation. So all those things will affect the global economy, but specifically the hedge fund. So and that's the main reason why I expect MC Short Squeeze on the next before the end of the year. I may be wrong, but I don't expect the hedge fund to survive a long time. And a lot of corporation start to lay off people, and also some hedge fund company also are going bankrupt. So uh, that that was my analysis for what's going on right now. So I've been away for a few weeks. I moved to the new place. So uh, if you have any comment, any question, feel free to leave a comment. Click on the like button, and I will respond as soon as possible. Thanks for your time. Have a great day. Bye bye.